Good morning, everyone. I'm Catherine Ross of TheStreet. I am here at the NYSE with Kenny Polcari, director at O'Neil Securities. Kenny, how are the markets looking to you?
You know what? They feel much better today than they did for the last couple of days, right? We've got a little bit of a bounce. I think some of that is just a bounce from a very oversold position. I think yesterday the markets took a little bit more of a hit, but you know what? I think we discussed this last week, we traded right down and tested the lows that we created in late October, and so therefore the market needed to do that. It needed to test again that low to make sure the buyers were there to defend it. In fact, they were. We rallied a little bit into the bell, certainly closed in the red yesterday, but off the lows. And then today, you get this little bit of a bounce. I think it's good. I think it's healthy. But it's also going to be a slow day the day before Thanksgiving. Volume's going to get very quiet in the second half of the day. So you can't read too much into what happens today and even what happens on Friday.
And what do you think will happen on Friday?
Well, so here's my sense. I think today they're gonna end up here, right? They're gonna end up closing up, closer to the highs than the highs of the day so far than not. And then I think Friday you're going to see a continuation of that rally. Now, Friday's going to be it's only half a day, first of all. It's going to be very quiet in terms of volume, so the move can be even more exaggerated. Whether it's exaggerated on the way down or the way up, the move can be exaggerated. And so I suspect that the move, it'll be up, and I think you might see an exaggerated move up, which would then cause the market next week to kind of come under a little bit of pressure again, to kind of rebalance itself. But I actually think the worst is over.
But so today we're trading at a lower volume than we were yesterday. You don't think that's an issue at all?
No, because it's a holiday. So no, you expected today was going to be a low volume, and Friday's going to be even lower. So I'm not worried about that at all. With that, I would say watch the move today, because then the lower volumes creates the exaggerated move, right? Up 20 points on the S&P is not so exaggerated considering what happened the last 2 days. And so therefore, if we were up 60 points on the S&P, I'd say, okay, that's exaggerated. But if we're up 15 or 20 points on the S&P, I think that's okay.
And looking at Black Friday and Cyber Monday and the retail sector in general, do you have any thoughts on that?
Yes, I think that everyone's getting themselves all worked up about retail, right? I know Target came out, negative forward guidance, and everyone had a nervous breakdown yesterday, and the stock's off 10%, and everyone's screaming about the consumer. Oh my God! I think it's all a bunch of I think it's all a bunch of baloney. I think the consumer's just fine. I mean, look. The consumer spent $9 billion on Halloween. Certainly Christmas and Hanukkah, the numbers are much bigger. But the point is, I don't think there's anything wrong with the consumer at all. And so I know the numbers every year. They project these big spend numbers for retail, and every year we beat those numbers, right? And so I suspect it's going to happen again this year. I'm not at all concerned that the retailers post-Christmas are going to say, oh my God, we had a horrendous Christmas Hanukkah season. I don't think that's going to be the case at all. I think it's going to be strong. And so therefore I think there's some opportunity in some of these retailing names that have gotten unnecessarily beaten up over the last month.
All right, Kenny, and one last question. Looking into 2019, do you have any ideas what you're going to see?
So yes, my mind has changed a little bit about 2019, right? If you had asked me this question a month ago, I was much more bullish, meaning I was bullish into the end of the year this year that we were going to close close to the highs. I don't think we're going to do that. I do think we'll get a little bit of a rally, but not to the rally that I thought. And now I'm beginning to think that maybe 2019 is going to be a little bit more difficult than I thought maybe a month ago. I don't necessarily think the market's going to I don't mean that to say the market's going to go lower. I just think that we're going to churn a lot in 2019. That there's not going to be a big move one way or the other. And if we return somewhere between 5 and 8% in 2019, that would be kind of back to normal, which is where I think it's going to be, because in the economic environment that we're in, with rising rates that we're in, certainly normalization around the world, not only in the United States but out of the ECB too, that. I think 2019 is just going to be a little bit, I think it's going to be an okay year, but I don't think it's going to be a stellar year.
All right, thank you so much for joining me, Kenny. It's always a pleasure to talk to you.
Always a pleasure. Happy Thanksgiving.
Happy Thanksgiving. Thanks for joining us, guys. I'm Catherine Ross of TheStreet. Stick with TheStreet for all the latest news.